Hey guys, this is Vic from Grasping the Market and welcome to our morning briefing. It's Thursday, May 9th, 6:19 a.m. So let's get cracking. We have no further change on the longer time frame. It remains the same, and the reason for that is because we had an inside session yesterday. This is a form of short-term balance, despite the intermediate auction pointing down. The detail on the market profile doesn't take us very far from the top-down approach because we had overlapping value and overlapping POCs. The POCs are almost matching. So it was a very well balanced session. However, when we expand the market profile, the periods, we can acknowledge some important information, and that is that there was several attempts to get back into Monday's range, and they were rejected. It was not possible to establish value inside Monday's range. And being the most prominent attempt, the flush we had on the deep period, and a little bit more detail on that, we tweeted in the morning that because we had a very prominent POC in that area, it was very likely that the market was going to test it, and failure to do so would expose market weakness. Now, this coincided with some headlines on the trade talks front that came out on the market, and it flushed up. But we also noticed, and we tweeted that immediately, that when the flush up created a double distribution up here, which was closed immediately. That should have been a very important warning about the relevance of the spike. And also, if you put that together with the fact that the overnight high, which was over here, could not be reached, you had enough information. Well, not enough information, but you have very important information to say that the odds of continuing further inside Monday's range was low, and that could have been a good opportunity for a short position, because you had quite a retracement from almost the 2900 area back to 2883, 84. That would have been a very nice trade. So the immediate focus in this morning is on the market ability to break from this current 2-day balancing range. And we've seen some attempt overnight. I think the location of the balance region is tilting the odds to the downside, given this build of acceptance and value underneath the Monday's low and the 2900. I think tilts the odds slightly to the downside. Acceptance above the afternoon high, which is marked here at 28.9675, would denote change and potentially incline the odds towards some upside, as it would start signaling a potential failure below Monday's low and below the 2900. So we start basically getting back in this area, that would signal change. But again, as we always say, anything can happen because odds are just odds. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Any opinions, news, research, analysis, prices, or other information offered by Grasping the Market is provided as general market commentary and does not constitute or replace investment advice. Grasping the Market accepts no liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from the use or reliance on such information.